Hello again and welcome to Module 5, Deciding What Shares to Buy. Now we're in the last topic of this module, and that's topic 4, where we put everything together, looking at taking information from the different financial statements, calculating ratios, and actually trying to decide on which shares to buy. So let's get started. So in the previous topic, we looked at the two questions, what am I buying and how much am I paying for it? And at the end of the previous topic, we looked at something called the PE ratio. And the PE ratio, as I mentioned, is basically the ratio that helps to answer the question of how much am I actually paying for this share, and gives you some sense of guidance as to whether or not you're paying too much for a particular share. And how is that calculated? You take the price per share divided by the earnings per share. So if your share price is 50 Rand and your earnings per share is 10 Rand, then 50 divided by 10 is equal to 5, which means you've got a PE ratio of 5. Okay, so what does that number actually tell you? It basically tells you that the price of the share is 5 times more than its earnings. And remember, earnings is just another word for the net income of a company. And why is that important to you as a shareholder? Because the net income is actually where the dividends are paid out of. So that's why it's of interest to you also. So another way to look at the PE value of 5 is that if you've bought the share for 50 Rand, it will actually take you 5 years to break even on that 50 Rand that you've spent, as in 5 years to get back that 50 Rand, assuming, of course, that there's no change in the share price. So now let's look at an example. So now we've got two companies. We've got Blue Limited and Red Limited. And we're going to look at their financial statements, just selected items, line items from their financial statements. And we're also going to look at the different financial ratios. So let's start with the financial statements. So we've got here, we're looking at sales growth, net income, dividends, earnings per share, equity, debt, and the share price. So how do they fare? So in terms of the annual sales growth, both companies have 10% growth rate, and we said that 5 to 10% is something positive. And then net income. So the net income or the profit of the company, Blue Limited is actually making 6 million after tax, and Red Limited is making 4 million after tax. So even though we've got this information so far, you can't really base a decision on just net income and sales growth alone. So let's look at dividends. Okay, so both companies pay a 2 Rand dividend, so that makes us indifferent there. And then earnings per share. Remember, we said that earnings per share basically gives you a sense of the profitability of the company, how profitable a company is, and you would tend to prefer a company with greater earnings per share. Well, Blue Limited has earnings per share of 5 Rand, and Red Limited has earnings per share of 20 Rand. So how do you choose? You know, Blue Limited has greater net income but lower earnings per share, and vice versa for Red Limited. Still not enough to make a decision. If you look at equity, Red Limited has 12 million, whereas Blue Limited has 15 million. And in terms of debt, both companies have the same amount of debt of 1 million Rand. And share price, Blue Limited shares cost 50 Rand and Red Limited shares cost 60 Rand. So do we base it on price? Do we base it on earnings per share? Let's look at financial ratios to help make sense of these numbers and to paint a clearer picture. So if we have to look at the debt to equity ratio, we see that based on the figures from the previous slide, that Blue Limited has a debt to equity ratio of 0.07, which is 7%, and Red Limited 0.09, which is 9%. Okay, so it's still lower than 1. So we said that a debt to equity ratio below 1 is favorable. So it's looking favorable for both companies. Return on equity, Blue Limited has a 40% ROE and Red Limited a 34% ROE. We said that 15% and more is favorable, so still both companies are looking favorable. In terms of the dividend yield, the dividend yield for Blue Limited is 4%, while it's 3% for Red Limited. Not much of a difference. If we look at the PE ratio, the PE ratio for Blue Limited is 10 rands, is 10, and the PE ratio for Red Limited is 3. Okay, so now that tells us something, that tells us a bit more. So that basically means that you're basically paying more for Blue Limited shares than you are for Red Limited shares. So looking at this particular example where debt levels are comparable, the other ratios are looking good, the PE ratio can actually be a good way to determine or to help you decide which share to buy. Because I would actually go for the Red Limited share, even though it's 10 rands more, it's 60 rands, but it's got a lower PE ratio. So in the ideal situation, you want a very low PE ratio and high earnings per share. And that basically brings us to the end of this module and the end of this topic. I hope you've enjoyed all the learning that you've gained so far and hope to see you trading on the JSE. Take care.